and Ms. Chanda Kochhar, MD and CEO at ICICI Bank. She joins in on the show. Chanda, good morning. Always a pleasure having you on the show. Markets are fairly nervous currently. As a banker, how do you see the fallout of the European crisis affecting Indian banking sector?
Well, if you look at the Eurozone, clearly the situation is quite volatile. I think it's quite a kind of a bumpy road ahead. But, the Indian banking sector per se does not have much of direct exposure to the Eurozone or the Euro financial sector. So in that sense, there may not be cause for worry. But clearly what the current global situation is doing is really causing a kind of a dollar shortage or a shortage of dollar liquidity, which means the ability to raise funds just becomes costlier and costlier. So that is one reason for which there may be some moderation in the growth on the international businesses of the Indian banks. Secondly, as far as the domestic business is concerned, I think there is an underlying momentum of growth that is coming on account of just the sheer demographics, the people who are buying homes, who are still buying cars. Also the momentum that is coming is on account of the past projects that were sanctioned 1 year, 2 years ago and are still getting implemented, so loans there are getting disbursed. But clearly there is a moderation in the rate of growth of housing loans, there's a moderation in the rate of growth of car sales, there is a moderation in terms of new project announcements. So given all this, I think, while at the beginning of the financial year one would have estimated that the Indian banking sector can grow at anywhere between 22 to 24%, I think now we believe that the banking sector would grow at about 18%.
Morning, Chanda. Nikunj Dalmi also joining in. Chanda, banking stocks currently are at a multi-year low. Moody's also has downgraded the sector recently. Do you think NPA concerns or asset quality concerns, which other rating agencies like Moody's and Fitch are pointing to, they're slightly overdone?
Well, I think, currently all the worries around the banking sector in India and the asset quality are kind of exaggerated. So I would not say that, this is an environment where we all do not have to monitor. I think we have to monitor how the projects are moving. We have to monitor what's happening to the quality of each of the projects that we have funded, the large corporates, small corporates and so on. But I still feel that there is a lot of stability in the asset quality currently. And, while issues could arise, I think the kind of reaction that we have seen from some of the rating agencies like Moody's is, in my view, quite exaggerated.
But, Chanda, rupee is the first indicator of the country outlook. Indian currency is at a new all-time low against the dollar, and Reserve Bank of India clearly has stated that they will not intervene in the forex market. So where do you think rupee is headed in the near term?
We have to, when we talk of rupee dollar, we should keep in mind what is happening globally. I think the dollar movement has been quite sharp vis-a-vis other currencies as well. So I think this is quite a result of all the underlying economic factors that are happening globally, and of course partly in India related to interest rates and inflation and so on. So clearly I would say that this movement that happened in the rupee dollar took many by surprise, because it was a very sharp movement over a very short period of time. But I think the regulators are taking the view to say that you cannot regulate too many things in a very tight manner, and finally the market forces will have some impact on the way some of these things move.
So Chanda, just to take the point on the currency forward, with the way the rupee has moved, do you think some of the SME corporates may now be facing more stress, and perhaps we can see a repeat of or a comeback of the 2008 like exotic derivative products market?
Actually, some of those SMEs that are in the export business would actually tend to benefit out of this. But yes, as a country, we have to remember that we import more quite a bit. So I think in that sense, it does impact the import bills across the different sectors in the economy. But I don't think that people are really getting into exotic derivative structures here. Actually, I think people are following a very conservative policy of either trying to hedge, by buying just simple hedging products, or trying to believe in natural hedge. That is, if you have exports on the other hand, then you have a natural hedge. But yes, in some cases the loan exposures have been kept open, and to some extent it is going to impact some of those companies.
Chanda, for ICICI Bank, after having been retail focused 4 to 5 years ago, you're now seeing more incremental growth focused from the corporate segment, but there is a slowdown there as well. So are you still confident of meeting the 18% loan growth target?
I would not say that our growth is more focused in one segment or the other. I think our growth is focused around 3-4 major areas. Our growth is focused around housing loans, focused around car loans, commercial vehicle loans, focused around working capital and trade finance for the corporate sector, and then of course project finance, which we select the project on a selective basis after doing our own project appraisals. So in that sense, I think the focus is really equal on retail side as well as the corporate side. It has so happened in the last few quarters that really the amount of disbursements that have taken place on the corporate side are much larger in size, because project disbursements are much larger than home loan and car loan disbursements. So that's why you've probably seen a higher increase on the corporate side, but the focus is actually pretty equal between retail and corporate.
Right. Chanda, ICICI Bank also has not large but exposure to Kingfisher Airlines. How are you planning to deal with your exposure in the entire aviation sector?
I think the bankers are kind of watching what the final business model for each of these respective companies would be, and I'm sure there would be different business models for different companies, but what one has to look at is how the cost structures have moved vis-a-vis the revenues. In fact, the good news has been that passenger traffic has gone up, so revenues have gone up, but on the other hand, cost structures have gone up substantially more, mainly on account of fuel and other costs. So I think every company will have to first work out their cost structure, will have to work out the routes on which they want to operate, and clearly additionally look at the financial structuring, the composition of debt and equity, and then arrive at what is the serviceable debt.
Chanda, the ICICI Bank stock has seen a massive beating over the past few weeks, with about 18% loan growth, 2.6% margins. How would you reassure investors of comfortably achieving your ROE targets?
Well, I think we are, we had said that we would get to a 15% ROE next year, and a growth in the profits of much higher rate. And I think in that sense we are quite on our way to achieve all those. I mean, we are growing, we are seeing a credit growth of about 18%, NIMs are holding well at 2.6%, and our provisions are quite under control. Actually, they are even lower than what we had expected when the year began. So I think in that sense we are quite on the course of what we had decided to do. So I would only say that if the markets have in general moved down, probably these stocks are at very attractive valuations.